Hello, Happy New Year, and welcome to The Loop Talking Tech. Last year, we surveyed hundreds of UK tech companies to really get under the skin of how the ecosystem's feeling. Today, I'm joined by David Blacher and Georgie Bole from RSM's own media and tech industry team. We're going to unpick the survey and think about our 2026 tech predictions. There's loads to unpick, but before we do that, David and Georgie, I do have a question. So David first, what was your highlight of 2025?
Okay, so this is going to sound a little bit fuddy-duddy, really, because it's old news. But for me, it was ChatGPT. So and what I mean by that was actually starting to use it in reality. I downloaded the app, and very quickly I found myself using that instead of Google. So I suppose for me, that's a real test of whether tech has arrived or a piece of tech has really landed when a plus 50-year-old is starting to use something every day and that becomes part of your normal life. So for me, it was the ChatGPT app.
Cool. Other large language models are available, but
Absolutely.
For you, ChatGPT.
That was for me.
Georgie, what was your highlight?
So for mine, well, in our household, we got our first electric vehicle this year or last year. And for me, my favourite aspect of it is the app that allows me to defrost it before getting out the house. And that has to be my highlight, not having to stand in that cold, in the frost, defrosting those windows.
Oh, well.
So, yeah, that's a full 100% win for me.
Certainly app today. It's cold as we sit here in January 2026. Cool. Okay, well, our survey, there's loads in it and anyone can find it online and have a look. But a few areas to talk about. I thought we'd first talk about investments and, what we felt about investment levels in UK tech companies. One thing I thought was really interesting was where tech companies are spending their money. So 30% of businesses taking their investment money and putting it into cybersecurity. David, what are your thoughts on our findings around investment?
Yeah, it was really interesting to see that happening in reality. I suppose so much has been written about the threat of cyber. We've seen the big cases around M&S and various other large organizations being hit by cyber fraud. And what was interesting was to see actually on the ground, this is what normal businesses are worried about as well.
I looked at it, I thought there's two sides of it. One is for UK tech, it's good because we have lots of amazing cyber companies. So if there's more investment in cyber, that helps all those businesses that do that. But then I was thinking, it's a new finding. Last year, we didn't see cyber as a top spend on a fundraise. And when you do a fundraise, if you're diverting a big portion of that into protection, that's not necessarily driving innovation and growth. So for me, I was like, well, is this actually, I suppose this is the danger of cybersecurity as well. It's both a threat to the business, but a threat to growth, that if we're having to protect ourselves so much, then this could actually be a damaging trend.
It's worth making the point. We saw it in the survey how it's the biggest single spend in tech businesses who are raising private equity money, and it's here to stay. I think you almost need to see cyber spend or defensive spend to protect platforms as paying the rental or paying the electricity bill. It's just a bog standard part of doing business that is going to be recurring year on year on year for all companies, not just tech businesses.
But an evolving point too, because as we talked in previous podcasts, it's an evolving threat, fraud and cyber and everything else. So actually, you need constant investment to protect against the evolving market, don't you? That's the danger.
This will just be a recurring theme. Every year, I'd be very surprised if we didn't see cyber at the forefront of what businesses are spending their money on. And let's not forget, if you're a tech business, you are selling tech platforms and you're selling access to technology. If you're not making that absolutely watertight in terms of clients feeling that they are secure using your platform, you've got a big problem and you've got a fundamental going concern issue.
Yeah. Probably a good time to talk about funding, actually, and where that funding. You mentioned PE, David, and what have we seen across PE, I guess, in our clients over the last year or so? Because the survey talks about quite a diverse landscape. PE money comes from different places, but what have we seen, I suppose, in our work in the mid-market?
Yeah. Look, I think in the mid-market, private equity still leads the way in terms of the sourcing of funds. That's where most businesses see the opportunity and that's where they focus their attention. But as I said before, it's a relatively hard landscape. Those PE houses are getting much tougher in terms of what they look for investment opportunity. Interestingly enough, a lot of businesses are looking towards flotations and capital markets for fundraising. Having said that, in 2025, that was a really, really flat market and we didn't see much activity in there. But I do suspect that in 2026 and going forward, I'm starting to jump ahead a little bit now, we may very well see capital markets come into play a little bit for tech because tech businesses do see that as a potential route for funding.
Yeah, because we've seen a couple of tech UK IPOs this year, 2025. So yeah, maybe some more in 2026. And one of the noises from the survey is a lot of positivity from the businesses on looking to the UK for an IPO. We asked UK Tech, like, where, if you were going to float your business, where? Overwhelming, a lot of them lean towards the United Kingdom, which I thought was quite interesting as a finding, because my rebuttable presumption was you would look to America, but that wasn't showing in our survey results this year.
No, correct. And behind the scenes, we see a lot of activity, a lot of talk at government level about trying to make the UK a more attractive place to list. We haven't yet seen anything tangible coming out of that talk. Be really interesting to see whether tangible changes start to be made to make the UK a more attractive proposition for listing and make it easier to list, because I think that's been one of the barriers. But it's definitely something UK tech businesses are keeping an eye on, and they are definitely open to that idea.
So can we talk about workforce, which before we start, I think is going to be the most important thing for businesses to think about in 2026. What I find really interesting is the survey results complement what we've seen in the immigration data, where we looked at skilled immigration in the summer. Well, it's dropped significantly this year and continues to drop. So we're seeing less skilled tech talent come into the UK. The challenges in the survey results around attracting and finding people feels like a real issue, I suppose.
I think what really showed was the inability to attract that talent into the UK. We're still needing to attract some talent from outside of the UK in certain scientific areas, whether it's quantum or electronics, robotics, etc. And I think that, on top of the changes that happen to visa applications and the likes of that, I think that's really showing a sort of a downfall. I think surveys have said that there's been a reduction of 10% of workforce coming into the UK from that point of view, and it is something that will be concerning for the advancement in UK tech. On the other side of that, it's the transferring what's happening at universities into tech businesses. I mean, they're the freshest brains that are coming in. And whilst, yes, AI can substitute certain aspects, but you still need that inspirational thinking.
We saw artificial intelligence like really starting to bite in the survey results this year. It was actually the main factor in reductions of headcount. So 29% of our respondents saying AI is the reason they're reducing their workforces. David, what's your thought on workforce?
Yeah, I think it goes without saying, AI is having a huge impact in terms of the type of workforce that businesses need to attract, whether you're talking tech or any other industry for that matter. And I think what you definitely are now seeing is a change in terms of what priorities are for tech businesses. They are looking for that top talent. Now, what does top talent mean? Question, because I think that's changing as a result of AI. For example, you can see tech businesses requiring less software developers, programmers, because a lot of that is now being done by AI. Whereas what they do need is cutting edge, forward thinking and development of their offerings. So more creative people rather than people focusing on software development. So I think that's where the talent war comes into play. And at that top end, when you talk about that sort of talent, there's a shortage. So what came through on our surveys and what we can see just talking to our clients is that real demand for top talent. I think that definition of what top talent is changing because of AI, and that's going to be the interesting trend for 2026, I think.
Yeah, and there's just this retention issue, isn't there? Like the workforce is cognizant that in many cases they are developing and using technologies that could ultimately lead to, redundancies, because effectively they're maybe developing the tool that leads to their own role changing significantly. And that creates, to me, an ongoing issue for management in kind of maintaining morale, motivation and engagement with the workforce. And perhaps 2025 is the first year where in our survey results, we've really seen that bite. We've talked about AI for years, but this is the first year we had such a big finding of saying, nope, the reason that we have unfortunately laid people off is artificial intelligence.
I mean, I'd be interested to hear your views on AI, Ben. I mean, you've probably been looking at this slightly more carefully or closely than myself and Georgie, but, where do you see things going in 2026 in terms of the impact AI may have on our technology clients?
Oh, it's a direction of travel. I think you continue to see a very fast evolution. I think evolution is a dangerous word because it kind of implies lots and lots of time. I think it is a rapid state of change that we're looking at. We'll see more tools. I think some of those tools become less expensive and therefore more accessible. What I'd like to see or think around AI is that if you can leverage it to do really new and exciting things, that generates growth, and growth could lead to employment. So, yes, like I personally think use AI to look for operational efficiencies. That obviously can lead to impacts on the workforce. But if you are able to take your business model and then turbocharging it using the technologies, you create more growth. And within that growth, hopefully there's more room for upside of employment, funding, maybe the ability to give back if you create a really profitable business. Like all of that does exist, I think, if you leverage it properly. And that's part of maybe the 5-year direction of travel. But for 2026, I think it's going to be more of the same. I think we will see some quite exciting new tools come to market, probably from the big techs. And it'll be interesting to see how they take it forward. And I guess finally, the regulatory landscape, the conversation around government will continue to evolve, which is going to be an evolution, because frankly, we're still learning about it as we go because it's developing. Let's talk about the US, where I think there's a really stark finding, because we wanted to understand how do UK tech feel about the US. 86% of businesses we spoke to are more enthusiastic about doing business with the US than they were a year ago, which is a really high percentage, especially when you consider like the broader environment around the United States. So let's talk about the US. Georgie, like when we looked at the questions around working with the US and trading with the US, what sorts of things stood out for you?
I think it's the willingness, as you said, to work with the US. We're seeing the funding coming over from the US, which gives the key tools for UK tech businesses to grow. But it's also giving the ability to use that cross-border aspect. It breaks down barriers effectively. If you're working alongside the US, you can reach a much more global picture. So whether you're looking to just use some technology coming over from the US, or whether you're wanting to attract talent from the US, we're seeing that there's still a huge discrepancy on the wage salaries between US and UK, which is a problem I think we're going to have continued into 2026. But I think the reticence previously of working alongside the US effectively could have come through the change of presidents. We're now a year into Trump's administration. Yes, we have all the tariffs that have come on board. They don't seem to have affected the tech industry. From our survey results, that wasn't a subject that came out there, which I think is promising on the basis that it hasn't discouraged that interaction with the US.
Yeah, I suppose you can't tariff an intangible good, which
exactly
is helpful for tech companies, but it doesn't seem to have dissuaded them, does it, David? Like, we're still seeing the US as a key trading partner.
What was interesting coming through in our survey results was that desire for businesses to think beyond the US as well. So that was quite an interesting finding. Whereas if you go back a year, 18 months, I think businesses, particularly tech businesses, UK-based, were so focused on America, they perhaps took their eye off the ball a little bit into Europe and going east. And I think the survey results show that that is back on the agenda. That's not to say America isn't still as important, but it's that point you make, Ben, about thinking globally, looking beyond just the shores of where you operate. And definitely Europe and East are as important now as they've ever been. If anything, they further up the agenda.
Yeah, I think there's been a pause for thought. It's almost been like the narrative around the uncertainty around tariffs has meant that tech companies took a step back and said, oh, hang on, what about everything else, didn't they? And look perhaps more closely and more deeply at other options. And I think that's definitely shown not only in the survey, but in our client work, that we are having more conversations about what does a global picture look like. So I agree. So Georgie, can we talk about R&D? And before we dive into the survey, can you explain in a nutshell kind of what is the R&D tax scheme and how does it work?
So the R&D tax scheme in the UK is a scheme that allows companies who undertake research and development and show that technological advancement that they're going through in their businesses, they can get support and incentives back from the government. So they can get money in the door from the government for undertaking these activities. And you can see that R&D scheme in the UK is really important to our tech businesses. It's also just as important that we've seen coming out of the Irish survey, where whilst the uptake on the R&D scheme isn't as high over in Ireland, it's still a key incentive over there. And the Irish tax authorities are now looking at how do they improve this incentive.
Yeah, and like broadly having a competitive R&D scheme or similar is really important to attract investment, isn't it? So the UK and Ireland both making sure they have competitive schemes to attract businesses to invest in their home countries.
Exactly. It attracts investment, but also attracts talent and workforce, because companies that are doing exciting R&D, that's where the talent want to go. They want to get involved with those technologies. They want to expand.
So another strong finding that stood out was 98% of businesses we spoke to submitted an R&D tax claim.
Yeah, it's a huge relief for startups. I mean, a lot of startups are looking towards that cash coming in from the government as part of their cash flow, how they move forward, especially in the earlier stages of funding where capital management is harder. It's a real incentive that the government just needs to make sure that they don't tweak too much, that it disincentivizes businesses, especially in that startup phase or even the scale-up phase, from undertaking these claims.
It seems counterintuitive that a business would say that they would not claim, a relief that's there to create employment and growth, isn't it? Because it's too arduous to put the claim in. But at the same time, you have something which, if you are prepared and you submit a robust claim, it's a fantastic tax relief to go and draw down on.
And it is a fantastic tax relief. It does give that lifeline to businesses. And I think sort of embedding the whole process or the ethos of the R&D scheme into your employees at an early stage, getting that on board with your tax advisor during the process, I think that will ease up on the burden on the employees to undertake the claims.
Yeah. David, any thoughts on R&D tax?
Yeah, just a couple of high-level observations. It's still interesting when you speak to international business, they still recognise the importance of putting in a claim in the UK because it is a good regime and it's beneficial. So why wouldn't you? And secondly, the number of people who still get it wrong. Yeah, it's interesting when we speak to new businesses coming through the door at RSM, how many either haven't made a claim properly, have missed a trick somewhere, have put in something where they haven't maximised opportunities. So I think against the backdrop of Georgie's comments around complication, new regimes, etc., it's more important than ever just to make sure you get your claims right and you get the process right. But it's a no-brainer. You've got to do the claim.
Yeah, and I think one of the challenges is so complex what you're doing in a tech company. You have to articulate that using the tax terminology, don't you? And the disconnect between the two can cause the challenge, perhaps, just due to misunderstanding. And we are working in a really complex industry where that can happen quite easily, especially on emergent technologies. Should we round off talking about London? Europe's leading tech city, arguably one of the world's, well, actually demonstrably one of the world's leading tech cities, arguably the world's leading hub. Like, David, what kind of stood out for you and our findings around tech companies in London?
Yeah, look, I think it's that theme around where London sits in the world city landscape, leading tech, right? So if you go back 5 or 6 years ago, there was a lot of play from other cities trying to vie for position in terms of being a leading or the leading tech center. And I think what has happened and what the survey shows is that outside of the West Coast and America, really it's London. That is the next big center. You see a lot of the big global tech businesses based here, a lot of the talent pool being drawn into London. I know we've already talked about that lack of talent, and therefore it is absolutely vital that we keep on seeing that flow of talent into London. The ecosystem around technology is great in London in terms of funding, investors, etc. So I think the survey really has just hammered home the fact that London continues to be one of the leading tech hubs for the world.
It's like a real player, isn't it, on the global landscape against your Silicon Valleys, New York, Boston, Singapore. Like, London's right up there. And in lots of ways, I think more compelling as a place to live and work in, depending on what bit of tech you work in.
Yeah, no, absolutely. I think it's interesting to see how a lot of the investor community in America are seeing London as their go-to city to invest in. That's where probably most of the activity is outside of America in terms of funding. And therefore, it just continues to lead the way. Yes, there are strong contenders in Europe. Scandinavia has a very strong tech base as well, and we've seen that grow, but it hasn't really rivaled the growth that we've seen in London over the last few years. So I think that's a really positive sign for the UK. I think it's worth adding, it's not just about London. I think what has been really encouraging over the last year in the UK is seeing the strength of some of the other tech communities grow, whether it be Bristol, Manchester, Leeds, Scotland, of course, has a really strong tech ecosystem, particularly around Edinburgh. So all of that has been really exciting. And let's not forget areas like Cambridge and the Thames Corridor, a lot of investment coming in there as well. So it's not just about London, but I think what is really pleasing for the UK and the UK economy is just how London has managed to stay ahead of the pack in terms of being one of those key drivers for tech business and tech investment.
Yeah, and I live in Bristol, so I see what happens in my home city, and a lot of the great stuff that happens is looking at what did London do well and looking to replicate it, and in many cases actually maybe improve it in a way that works better for that ecosystem, if that makes sense. And actually the UK is lucky because if you look at, for example, our Tech Incorporation survey, you see strength and depth across the whole of the UK, but particularly clustered around where there are strong innovation ecosystems in those regions. And maybe a strength for the UK is we're still a relatively small country by footprint, and this is where infrastructure matters, doesn't it? That if you can get from Leeds to London to Bristol quickly and you can work that way, which helps everybody. And that's why infrastructure investment actually does feed into what we're trying to do as a country. And if the whole thing knits together, it becomes really, really powerful. Well, that's our survey unpicked in a huge amount of detail, which people can go and find online and read through. But let's talk about 2026 and kind of, I guess, call to actions. Like David, like what's your kind of prediction for 2026?
Well, I think for me, it's this point about how you start to monetize the changes AI are bringing into business. That for me is going to be the key thing I'm going to be looking out for. How does a tech business take the AI tools that they've now embedded in their businesses? Yes, they will evolve, they will change. And then how do they turn that into pound notes? How do they change their product? How do they change pricing? How do they move away from what has actually been quite a traditional world in technology, which is that SaaS recurring revenue stroke license type world, into something a little bit more innovative, a little bit more different that takes on board AI?
And then how do you think deals, transaction and fundraising, how will that kind of flow through in 2026?
Okay, so I know we said the same thing last year this time, but I'm going to put my neck out and say I think you're going to see a real uptick in transactions. I think all the ingredients are there for it. Private equity sitting on a huge amount of uninvested money. Interest rates have definitely plateaued. With a bit of luck, they start to come down a bit. And if you remember correctly, interest rates have probably been one of the blockers to more deals being done. And more innovation, more opportunities, more new businesses coming online in the world of technology. So I think if you take all those three ingredients together, you take away the relative stability we've now got politically. We've got no big general elections, no big changes of leader. That should leave an environment that actually is ripe for transaction growth.
Cool. And Georgie, same question to you. 2026, what does it look like?
So I think the area to look out for is the talent, it's the workforce, it's the retention of that workforce. How do we retain employees in these tech businesses? How do we keep bringing in fresh ideas? How are we drawing them from the university ecosystem into business? I think that's a really interesting side that is going to be looked at more and more. And I think it's a real opportunity out there for tech businesses.
Was there anything in the budget that's just been announced that will allow tech to kick on? Or is there anything to watch out for that affects 2026?
I think from a budget point of view, whilst there's a lot of hype in the run up to it and a lot of noise in the media, I think ultimately the changes that have arrived, they're not huge, they're not groundbreaking for tech businesses. There were a couple of aspects that were really interesting to see. So the changes in gross asset tests and investment capital for EIS and VCT investment, it allows that investment to come through. You're not just reliant on the private equity, the listing side for investments, but it's trying to reinvigorate the entrepreneur's investment into tech businesses. So whether you're startup or scale up, there was a real sort of push in the budget announcement talking about startup, scale up, stay, looking at that point of view. So alongside the budget, they also released a perspectives and a call for evidence. So that call for evidence is asking for SME businesses. It's asking for, all businesses, what is it that the UK needs to do to reinvigorate EIS VCT? Alongside that, they've also helped with the EMI scheme, so share investment scheme. They've changed they've increased the eligibility there, which again, going back to workforce and talent, it allows companies in that startup scale up position to really bring on the best talent through this share incentivization, which gives them great tax release themselves. Alongside from that, also looking at the other side, not just the startup side and scale up, but the companies who are really, really doing well, looking to stay in the UK. We're not wanting tech businesses to do all the great initial building of the business here and then move overseas. So the government, again, are conscious of all this and conscious of the IPO market. They're looking at that investment relief. So when we're looking at that investment relief, what it does is it removes SDRT, so stamp duty tax effectively, which was at 0.5%. They're effectively making it exempt for 3 years. Now, when we look at that on a broader scale, the US doesn't have an SDRT equivalent. Europe has a tax transaction rate, but that's 0.25%. So this really puts us on a level footing with other markets outside of the UK. But it could also give a real boost to companies on listing to get the higher share price to begin with.
I had 2 questions and 2 thoughts. Was there anything missing from the budget that we really needed for UK tech? And actually, is there anything that the government can do that can really turbocharge growth?
Well, from a tax point of view, of course, I'm going to say tax incentives. So yes, we have a great R&D scheme, but what can they really do for tech businesses? Tech businesses are the heart of what is R&D effectively. Could they go further? Could they have different rates for varying different sciences that's been advanced? I know from the industrial strategy that's been published, there's a real keenness on quantum and the likes of that. Robotics, quantum, could they put different rates in for the R&D scheme? Could they tweak that scheme to encourage more of this activity in the UK? And it's also something that we've seen in our technology survey that we undertook when asking businesses what do they think should be coming out. Their top tip that they want to see coming out of government is incentivization, whether it's a tax incentivization or whether it's incentivization to bring more funding into the UK. That's what businesses are really wanting to see as well.
Yeah, we're really good at that. So why not take that footing and be a true global leader by saying, here's a real shot in the arm for these parts of technology. And then that will only help. It will have a halo effect, won't it, of other things around it. So I agree. There's options there for the government moving to 2026.
And Ben, I'm going to turn the tables on you now. You've asked us about our predictions. What about you? What do you see happening in 2026? What's your top tip or top prediction?
By and large on UK tech infrastructure, so data centers, stuff like that. Around that, commitments and promises around funding and talent and skills, which I think is really, really important that you have that in there. So I think it's keeping an eye on that and seeing how that unfolds. Firstly, will those commitments actually unfold? And I think they will, for what it's worth. Not necessarily all in 2026, but to me, there has to be value around the leading tech companies also funding stuff in other parts of the UK tech ecosystem, funding programs, ploughing resource, and actually just having people who understand how to work at the cutting edge in the United Kingdom. And that's why I personally believe quite strongly, skilled tech immigration is really, really important to what we do. I think Silicon Valley's proven that if you have a high rate of skilled immigration, it creates entrepreneurial spirit and energy and great companies. So I want to see more of that from the UK. So actually the thing that I'll be most interested to see, and we'll look at this over the summer, are the number of skilled tech immigrants that come into the UK. And if that continues to decline, that could be quite worrying. So hopefully we'll see that either stabilize or bounce back. So that would be the kind of key data point that we'll keep an eye on. And we tend to look at that through the summer. David, Georgie, thanks so much for joining us today. It's been brilliant. And thank you everyone for listening. Tuning in. We've covered a lot in our series this year, from what AI can do to restaurants to the economic impact of the sector on the UK. And we even talked about what technology can bring to the construction sector and unpicked podcasting as a subsector itself. As we bring this series of the Loop Talking Tech to a close, I want to say thank you for listening. It's not the last you can hear from us. If you want to hear more of our insights, then check out our website, read our full technology outlook, and sign up to receive these straight to your inbox. And that just leaves it for me to say thank you for listening and have a great 2026.